All right, 30 degrees right now. Well, at least here in Barrie, but depending on where you are, could be into the mid-20s, and in some of the hollows, even cooler than that. So look out for some slick spots. I think Roger Hill was saying early this morning, mostly west of the greens, into the Champlain Valley is the coldest spots this morning. So be careful of black ice. Just keep your speed in control. Allow plenty of distance between you. Now I'm sounding like my mother. Between you and the guy in front of you. Just be careful this morning, I think is what we're saying, getting out and about. Thom Lauzon from Salvador Babic, our guest this morning. How come no coffee over there, my friend?
No coffee?
Yeah, no. I don't see any coffee in front of you. What's going on?
Well, I had coffee.
Oh, you've already had the coffee.
Yeah.
Good morning. I'm glad you're here. You were just on the Barrie Beat last night, so gosh, maybe we might have to start charging you rent because you've been in here so much. You're in the building all the time now.
Well, thank you for having me.
Yeah, I'm glad that you're here. We're going to talk taxes this morning, and before you tune out, let me tell you, folks. We're going to have fun.
You'll be tuning back in when your refund gets held up. So you might, JD, it's hard. There are a lot of tax law changes during the year.
Yeah.
We're not going to talk a whole lot about tax law changes affecting businesses. It's really this program is really going to be geared towards folks with a W-2, perhaps a few 1099s, maybe a child tax credit.
Yeah.
Who are just, trying to navigate.
Sure.
I realize it can be challenging for a lot of people.
It can be challenging. It can be complicated. You can get really deep in the muck with this. So I have to tell you that Raylene and I have decided that we've put a shocker on your chair, and we're going to electrify you if you get too complicated this morning. We're going to zap you. Okay,
that's okay. I'm not going to get complicated. Listen, sometimes the tax law does that for you. It certainly isn't my choosing. The new W-4, for example.
Yes.
It's like, really? I don't know if anyone has filled out their W-4. We used to have this wonderful system where you'd simply check a box. I'm single, I'm married, I'm head of household.
Yes.
I want to withhold at a different rate. I'm exempt. And then you'd say, and here's my number of allowances. 0, 1, 2, 3, whatever.
Be done.
And all of a sudden, we've got this calculation that, I mean, honest to God, when I saw the new W-4, it took me, I did it for myself, and it took me about 30 minutes to finally complete that calculation. I couldn't understand, understand the calculation.
Isn't that amazing?
I got it down now, but... yeah.
So what is it? April 18th
April
this
18th,
year?
yeah,
Unless you file for an extension.
Unless you file for an extension, and if you file for an extension, you have until October.
All right. What I'm hearing, Tom, I know you're hearing the same thing, is that good luck on getting your check anytime soon with staffing issues and COVID and so on and so forth. Everything's being blamed on COVID. Well, it's going to be a while?
Yeah. No. I mean, so if you file early, file as early as you can.
Yeah.
Make sure you have all of your documents. File early. Most importantly, file accurately.
Uh-huh.
And the tax departments, the Internal Revenue Service, the Vermont Department of Taxes, they've been through everything that we've been through. They're not like immune to the effects of COVID and having to pivot and relocate people. Our tax department, Vermont Department of Taxes, they have done a great job. When they had to pivot like early in 2020, some of the field auditors and compliance folks, they stumbled a little. I mean, it was a big adjustment for them. They stumbled a little bit, but, they picked it right back up. In the past 3 to 4 months, you really don't notice any difference in customer service at the state level.
Yeah.
The Internal Revenue Service is quite a different story.
Yeah.
They are still processing paper returns that were filed a year ago.
Okay.
I don't know where they store them. I mean, I've heard stories
I'm
about
sure,
tractor trailer loads full of, I don't know, Bella Vance trucking.
Well, what I heard is they're in a shipping container floating off the coast of Boston right now. That's what I heard.
I don't think they're doing that, but they're But the thing about Vermont, when you practice in a small state like Vermont, I know most of the Vermont employee. It's not a big. Vermont isn't a big state, so I know most of those employees, and they're really working incredibly hard. Under challenging conditions. So, when you've practiced as long as I have, and you've got relationships with revenue agents and revenue officers that go back 20 years, I feel for them.
Right.
So they really are struggling. But the most important thing I can stress is file, accurately. They're behind.
And e-file maybe if you can.
Absolutely e-file.
So,
absolutely file electronically. Have your refund automatically debited to your account. They will do that. I hear from a lot of people saying, well, I don't want the IRS to have my bank account number. Guess what? They already have it. They've had it for a decade. Well, no, that information is downloaded to the Department of Treasury.
Sure.
So they have that. And many people, when they were receiving stimulus checks, they had their stimulus checks automatically deposited.
Right.
Which brings us to, one of the points that I want to make. There was a $1,400 third stimulus check in 21.
Yes.
So what the IRS is going to do.
Pay attention now, everyone. Pay attention.
What they're doing is you'll get a letter from the Internal Revenue Service, and that letter will let you know, we sent you your $1,400 stimulus payment. You did receive it.
Yes.
Now, because of delays and other things going on, not everyone will receive that letter, even if you received a $1,400 stimulus payment.
Okay.
So, when you file your tax return, and it doesn't seem that difficult to me. You just go through your bank records. Mm-hmm. Did you receive? Do you see a $1,400 deposit in there somewhere? If you did, you got the stimulus payment. One of the biggest mistakes I'm seeing right out of the box, because on occasion, people will call me and say, family certainly, hey, I'm doing my tax return. Can you look this over? The biggest mistake that I'm seeing so far is that. If you did not receive your stimulus payment, if you really didn't receive it and you're sure, you can apply for it with your tax return.
Okay.
And you will receive an extra $1,400 if you did not receive it.
Interesting.
I'm seeing a lot of people saying, well, I can't remember, and they don't want to go look it up.
Got to.
So they say, I'm going to check, no, I didn't receive it, and ask for another $1,400.
What happens if you do that?
Well, when you do that, it kicks your return out potentially. So your return will likely be rejected, and the service will say, this information is inconsistent. These folks are saying they're due another $1,400.
Oh, my God.
Our records, and they do have good records. They have a good matching system. Our records indicate that they did receive it. So, therefore, we're going to put this return aside, and we'll take a look at it later. Well, if your return gets put aside, and we were just talking about how challenged the service is, if they're going to be looking at it later, you're going to be waiting you'll get your correct refund someday.
Yeah, July, August.
They will not send you an additional $1,400. That won't happen. There are safeguards built into the system. But like I said, if you legitimately didn't receive it, then you'll receive that $1,400. But again, it goes back to making sure that things are accurate on your return. So take that extra time. If you truly don't know. I've had people say, well, what if I really don't know? What if, we got 3 stimulus payments and they were all coming at me so fast and I didn't get the first 2 on time, so I went to that web page and then I remember, I think I know I got the first 2, but I really don't think I got, what should I do? Well, if you really don't think you got it, but please do a little research.
Yeah.
If you really don't think you got it, then you do need to say, no, I didn't receive it, and ask for that additional $1,400. Because if you don't tell the service that you're due that $1,400, they will assume that you didn't qualify for it.
Right.
So if you don't ask, you won't get. But it's just really important for it to be accurate.
So if we're going back into our online bank account and we're looking for that $1,400 deposit, what's the window of where we should be looking? I don't even know. I can't remember.
Well, that's part of the problem, because I would say
It's a big window.
not everyone received it at the same time.
Yeah, right.
The payments went out at different times.
So do a search for $1,400.
Do a search for 1,400.
Yeah,
and
sure.
some folks said, well, I think I remember cashing it.
Yeah.
So of course there would be no bank record of it,
Right.
and unfortunately, the IRS webpage where you used to be able to go back and look it up
Yes.
is no longer functioning. So
Since when?
I checked it a while ago, and they're challenged.
Yes.
So all I can tell people, that and the additional child tax credit.
Yeah.
That's another one.
Oh, my
With the
God, I
additional
forgot about that one.
Child tax credit. Again, you're going to get what's called a 6419 letter.
Okay.
And that letter is going to tell you how much additional, and I don't know, JD, if you receive that because you have a dependent. So if you receive, for example, that additional $300 a month throughout the year, well, 3 or 5, depending on what you qualified for. Yeah. If you receive that additional amount of money during the year, you're going to get, and I say going to get, because we're always a little at the mercy of the Department of Treasury. You are supposed to get a 6419 letter that tells you, here's what you received. Here's what we sent you in advance. It was an advance credit. So some people, $3,000 or $3,600, again, depending on how much, because that tax credit, which used to be $2,000, that tax credit went up in 21. It's going back down in 22, going back to $2,000. But in 21, pursuant to, I believe, the CARES Act, it went up to either $3,000 or $3,600, depending on what you qualify for. So you may have received an advance payment. A lot of taxpayers did. And it's important that you have that 6419 letter. Whether you're going to a preparer or doing it yourself, you got to have that letter.
Yeah.
Because, again, if you put in for an inaccurate amount, if you say on your return, well, I didn't get any advance money, but you in fact did,
right,
it's going to kick your return out.
And
you may be due, and this is the part that really gets a little under my skin, not angry or anything like that, but there are a lot of folks, certainly here in Vermont and all states, who depend on the earned income credit. They receive a fairly sizable income. They're people who are a little bit lower on the income scale, and they generally receive a fairly sizable income tax refund. And they really depend on that refund to get them, through the winter, to pay heating bills and to pay grocery bills and perhaps get a little caught up on things. If they don't file accurately, so they may have a $3,000, $4,000, $5,000 refund coming that they really need. And if they don't file this accurately, their correct refund will likely not get to them for months. And with the Department of the Treasury, the IRS, as challenged as they are, it's going to take a long time to get through. So that is, that's really my biggest message to people. Take your time preparing your tax documents. Make sure you gather everything, and please make sure you file electronically and accurately.
Are the next few months, is this tax season going to be more hairy than last year for everyone, for especially for you guys over in Salvador and Babic?
I mean,
is it more complicated?
I've done it for so long. So
is there more pieces to the puzzle now?
There's not really more pieces to the puzzle so much as there is confusion.
Okay.
Like I was just talking about, okay, you're supposed to get a 6419 letter.
Yeah.
You're supposed to know whether you got your stimulus check. Excuse me. A lot of people are saying, well, I don't know. I don't know. It's like, well, you have to know. Yeah. Because if I don't have accurate information from you, I can't file your return accurately.
Right.
If you legitimately didn't get that $1,400 and we don't tell them that you didn't get that $1,400, then you're not going to get that $1,400.
Yeah, right.
You're going to miss this opportunity. So, again, it's not, is it hairy? Are you under more pressure? No, I think people are just a lot more confused. There's a few more moving parts.
Yeah.
You know, unemployment compensation.
I was going to ask you.
I already had people.
One of the big things, man.
Yeah, who received unemployment compensation last year in 2020. The first $10,200 was not taxable. We just, you'd see a little notation on your return, UCE, unemployment compensation exemption, $10,200, so or lower. So if you receive $9,000, obviously that whole $9,000 would be exempt. If you receive, say, $15,200, then you'd only be paying taxes on $5,000. That went away. That is not there. And again, the confusion is that because it happened so quickly in 20, there was no separate form, right? We didn't have this form where you it was just you write in UCE, minus $10,200, and you deduct that from your income. Well, there are some folks who are filing who think you do the same thing this year. You don't. There's no such thing as any unemployment compensation and exemption in 21. That provision in the law that sunsetted in 2020. So that's it's really important that people realize that. So again, it's the confusion, and I get it.
And I tried to do a little bit of homework on this last night. Pulled some of my hair out. Just about 4.1 million people have been unemployed for more than 26 weeks, which is about when state unemployment insurance typically runs out. And unemployment compensation was, shall we say, very generous in 2020.
It was, appropriately. We knew. I think the federal government did a good job. Getting people through this crisis, but that's the political side of things.
Of course.
This is,
of course.
This is the reality.
What
this
about
is taxes? So again,
what about
no exemption for unemployment? Don't take that in 21. If you do, your return's getting kicked out, and you might see your refund in time for retirement.
Right. Yeah. What about this $900 billion relief package that included that $300 extra a month? Is that coming into any play here?
Well, again, the $300 a month, that was the child credit that I was talking about. The advanced child credit. So again, depending on
I'm talking about part of the CARES Act.
Yes.
Yeah. All right.
So again, the child tax credit went up in 21, and it was quite a bit more generous, almost doubled, going back down. So I've had a few people call and say, when am I going to get my $300 check?
Right.
Well, you're not getting the $300 check. It expired at the end of
and this is separate from the American Rescue Act, which was also $300.
Correct.
Up until the beginning of September, I think.
Yep. So there were a lot of different programs. I understand it can be confusing, but again, just please take the time to research it, because as I said earlier, those are the folks that I'm really concerned about. The folks who really look forward and depend, on their refund to get through winter. And I'm just concerned that they're going to make a mistake and their refund's going to be stuck somewhere in limbo. That won't happen. When I talk about that, that won't happen at the state level. Okay. You'll get through. Yeah. They've done a great job. Like I said, they struggled a little bit. Tax Department obviously struggled in the beginning of the pandemic. And I was writing to the tax commissioner the other day, emailing him, and I said, look, I really got to congratulate everyone at the Tax Department on pulling it together, because it was clear that through really no fault of their own, just systems and circumstances, you could tell they were really struggling. And they, over certainly the last 3 months, they've pulled it together, and now it's like it always was.
So if you received unemployment, you should keep your eye out for this 1099-G.
You'll receive. That's how you know.
Should that have been already in our mailbox by now?
Most folks have received it. Not all, but by now, certainly within the next week or so, everyone should have received it. The Department of Labor last year, you remember, there was an issue with some of the 1099s that went out.
Yes.
We have experience, again, lessons learned during the pandemic. We have not experienced that, and they've done a great job, pulled it all together, and we're not experiencing that. So in terms of the information that's coming to you, all of your 1099s, W-2s, that seems to be pretty seamless this year.
So one of the big questions I have for you, frankly, is Salvador and Babic. Are you guys buried right now? Are you receiving more clients, more folks coming to you saying, "Hey, I need you to do my taxes. I don't know what I'm doing. What do you need from me?" Are you taking customers right now?
Are we? Well, I mean, we're of course. I mean, we're always looking to help people. That's our role in the community. There's been times when we finish up early. I don't do a tax return on April 15th. Well, I don't do a tax. You plan your schedule. You work hard early. We have great clients who get their information in. They understand. And I just tell people, this is too important. So I actually try to finish up, a few days before. There may be, one or two returns that you might be missing some information. You can't complete it until the 15th. But we really work hard to wrap our work up early, only because this is important. It's something I always tell.
But in your career,
I file a lot of tax returns.
I'm sure you do. You've pulled a few full-nighters, right?
I'm sorry?
You've pulled a few full-nighters, all-nighters.
Yeah, on occasion. Generally not. You got to be able to focus. So it's not like, college where you're cramming for an exam. And, like I started to say earlier, JD, what I always explain to staff accountants, and we really have the best staff. I'm blessed with the people I work with. But what I explain to them is that, I may file hundreds of tax returns a year, but you got to remember that client only files one. It's really important to them, and it's important that it be right. We're not perfect, but we work really hard to get it perfect every single time. So, yeah, we're here to serve, and the hours are going to be long. It's generally, it can be upwards of 12 to 16 hours a day. But you get
for what months?
For what month?
Yeah.
Starting about now, I do a lot of entity returns, corporate returns, partnerships, LLCs. And now with the accounting software, it's hard being an old guy.
Yeah.
Because, see, I remember when we computed everything by hand, where all we had was paper forms. We didn't have computer programs.
Ouch.
So way back in the Stone Ages, when people actually maintained, and we still have some of those ledgers. They're a kick. The paper ledgers, where people actually had to write everything in and total it by hand because we didn't have programs like, QuickBooks.
Is that how old you are, Tom? Is that how old you are?
I am that old, yeah. Yeah. I mean, I came into this profession at a really interesting time because had about 5 years where computers really weren't a thing. Electronic filing wasn't a thing.
Right.
I can remember when the Internal Revenue Service first accepted electronically filed returns.
Yeah.
Now it's, obviously just the norm.
Yes.
So, yeah, I can remember,
The coffee pot working overtime?
No. I mean, I really try to, I probably water more than, I drink my coffee in the morning.
Yeah.
And then I just, drink water. Ever since I mean, look, Tom Brady drinks like 2 gallons of water a day.
I know.
And look how it worked out for him.
I know. This is true. This is true.
So I tend to go more the water route.
Does Karen, you've been married for how long?
Well, we're like segueing right out of taxes.
We have to.
Does Karen what?
We have to.
Karen understands that she is married to a CPA.
That's what I was asking.
And she knows that.
How long have you been married?
Oh no, I'm gonna get
killed.
We'll
now. Just say
30,
many years.
19,
Between 30
35
and 40.
years.
All
35
right.
years.
So she's her skin has thickened with the understanding.
She leaves a plate in the fridge.
That's it.
Some nights if she Doesn't mind. I try not to eat too late. I may grab something at the office because, you don't want to come home at like 10 o'clock and eat. And then,
right. Well, just so you know, when you've had some particularly busy years at Salvador Babic, we've had some massive parties over at your house with Karen. Just a huge. We had a full band. We were able to get cleaned up before you got home. But seriously, does she forget what you look like a little bit?
No,
Okay.
I always come home. There are a few, like first 2 weeks of March are really busy.
Yeah.
Because you've got different deadlines. So partnerships, S corporations, LLCs, those are generally due March 15th.
Okay.
That is the deadline for entity returns, and I do a lot of those. So the first 2 weeks of March, you're trying to get those entity returns, those business returns buttoned up, but you still have an obligation to folks who are filing their personal tax returns.
Right.
That's probably the most challenging time, the first 2 weeks of March. You get past that, and
it's not like April 16th you get
but,
to sleep 12
but
hours.
But again, it's having done it for so long, I kind of get a kick, I get a kick out of, we have some great junior accountants, some younger accountants. I get a kick out of watching them panic. Because I've done it for so long that I know, they're all, every return is a block of time.
Yeah.
And sometimes they may change a little bit. The entity return may change. They may have a business, they may have something that changes the return and the amount of time that goes into the return.
Uh-huh.
Generally not. Generally, they're fairly consistent. So they're all, like I explained to people, sometimes folks will call and I'll have a client who will say, well, Tom, I usually get my stuff to you by February 15th, and I'm really sorry, but I'm going to be on vacation. I'll get it to you the following week.
Mm-hmm.
Oh, my inconvenience. And clients are so great. Am I inconveniencing you? And it's like, no. I just pick up your block and I move it to a different spot. So it's all, it's really about time management.
What does your desk look like over at Salvador and Babic?
What does my desk look
like? What's your desk look like? Are there papers stacked up to the ceiling? Are you?
I tend to be a paper guy. So yeah, mostly reading material. Client information, no. Client information is, we are so careful with that.
Yeah, sure.
So no, it comes into the office. It goes in an envelope. The envelope is sealed. It goes into a folder, and we have a great system. We also have now we have an electronic portal. So folks who want to download their information, which was really helpful, we had developed that and used that prior to the pandemic. But that really became useful, during the pandemic. So people can go, and it's secure.
Yeah,
it's all encrypted, so folks can go to our webpage.
Still have
and they
that.
can. Oh yeah, and they can upload that information. A lot of folks really, it's kind of funny because a lot of things that, a lot of processes that we developed during the pandemic, people kind of like it.
Yeah,
like we used to tell people. We like to have you come in and get your return.
Yeah. And
people started, and during the pandemic, obviously, the office was remote. We were still processing at the office, so we used the U.S. mail or we used FedEx.
Yeah.
And a lot of people found they really liked that. They're like, well, hey, I like seeing you guys, but it's cold and I don't want to jump in the car. Can you mail it to me? So, we installed 2 very secure big steel drop boxes for folks so that
really,
if you happen to go by the office after hours, they're secure, they're watched, they're monitored. So if you happen to be going by the office and you want to, and it's tax documents.
Yeah, right.
So if you're going by the office, seal it in an envelope, put it in the Dropbox. We monitor that a few times a day
when it's convenient for you to drive by. So that's nice.
So we learned a lot, and we made things a little bit more convenient. We were remote for a period of time. Personally, I prefer my office.
Yeah.
Home is home. Home is where I go to be home. So, and I'm really fortunate because I live, if I hit both lights correctly, I can be in the office. I can be at the office in 4 minutes from the time I leave my home.
Wow.
If I hit the lights.
Yeah.
I got to hit both of them. So, So even during the pandemic, when people were remote, I didn't need to be. I was the only one in the office, kind of holding down the fort.
I wanted to ask you, and I found this so interesting about states that tax Social Security benefits. There are 12 that do that, and Vermont is...
No, Vermont actually has an exemption.
Well, what's the deal with that? Because I have Vermont here that single filers with an AGI of $45,000 or less qualify for a full exemption from paying.
Right. So not everyone.
Okay.
So in the state of Vermont, not everyone will qualify for an exemption of taxable Social Security. But Vermont does not. When you say, well, Vermont taxes Social Security, yes, for some people, for folks who are a little higher on the income scale. So if you're single, income of greater than 55,000, you're not getting an exemption. If you're married, income of 70,000, you're not getting an exemption. If you're single with income less than 45, you're getting the full exemption, and then you phase out in between. So, again, pay attention to that when you're filing your Vermont return. Vermont does offer, depending on your income level, we do offer to exempt your taxable Social Security on your federal return. So pay attention. Pay attention to that.
And the rate for Vermont, I'm showing 3.35% to 8.75%.
Correct. So and again, depending on where you fall on the income scale.
Okay. And obviously, for more information, you can contact the Vermont Agency of Administrative's Department of Taxes, or you can just pick up the phone.
Just call the Vermont Department. Go to their webpage. They really do. They have a great webpage.
Simplified enough for dumbasses like me?
I'm sorry?
Simplified for folks like me?
Simplified for folks who aren't a CPA.
Yeah.
Well,
that's the way
if you asked me to jump on the radio and run a show, I couldn't do it.
Well, you did. You did with me for years. My God.
No, I didn't. Well, I ran the show while I was there. Yes. But in terms of the technical side, no, I never. Yeah, you and I had a lot of fun on the radio back in the old days. But
I'm not.
Yeah, but in terms of the technical stuff, so I think the tax department does a really good job on their webpage. Fairly, pretty easy to navigate. And I understand, the forms can be, everyone knows another big change this year on the Vermont side. This was legislature because obviously all of our tax law changes are promulgated by the legislature. So they changed the renter rebate. It used to be your landlord would give you a certificate and then you'd apply for your renter's rebate. You no longer get that, so... It's and you used to be able to calculate the amount of your renter's rebate. You'd actually do a form and you'd say, well, I'm going to be getting $1,500, $1,000, whatever that you knew in advance.
Yeah.
It doesn't work that way anymore. Legislature made that change. So when you fill out the form, you're simply applying for it.
Yeah.
But the form isn't telling you how much you're going to get. Mm-hmm. Now, the tax department on their webpage, and I apologize, JD, I should have brought the address with me, but there's actually a calculator. So if you obviously know your income because you filled out the form, you can actually go to the calculator. They have a great calculator on their webpage.
Yeah. And
you can figure out pretty close how much you're going to get. It might be off by $1 or $2, or maybe a little bit more, but it's going to be fairly accurate. So that again, that's one of the big changes. And one of the folks that I work with, who's great, she identified early. She said, well, this is going to be a problem because everybody wants to know, well, how much is my refund? There are clients who qualify for a renter's rebate, and we're not going to be able to tell them how much you're getting, and they're going to ask us. So how about if we complete this worksheet for our clients and we'll give it to them with their tax return? So So at least they know, roughly how much they should be looking for. Those checks usually go out a little bit later. That is a program that is separate and aside, from the the tax program.
I keep getting these emails from AARP, and I'm not sure. Why are you
That's
laughing?
because you're old.
I'm not sure
Because
why.
you're old as dirt.
I mean, somebody thinks that I'm older than 50 for some reason, and I'm not sure why. But I keep getting these emails that keep coming in about tax breaks for if you're older than 50. That there's some great tax breaks that are aimed for you, mostly with regard to your Roth or your traditional IRA. And your HSA, your health savings
there's some
account.
catch-up, what we call catch-up provisions. So some of those items, whether it's an HSA, an IRA, there are provisions in the tax law that say, look, if you're a little older, over 50, and you don't feel like you've quite put enough away, we're going to give you the opportunity, because you're older, we're going to make this catch-up provision, and we're going to allow you to put a little bit more away.
Yeah, like $1,000, isn't it?
Yeah, it can be pretty significant. So, we always encourage, we always point, we have a big client checklist that we send out to our clients. Mostly it's informative. We really know our clients well and work hard at that. The checklist is really informative. Like I explained to people, a lot of times, it's this big form. It's, 8 or 10 pages.
Yeah.
And it's got a lot of questions on it, a lot of information. And I understand that people sometimes, they'll glaze over.
Yeah. That would be
But
me.
as I explained to them, it's really our way of making you aware. If you don't give us the information, if you don't make us aware of something, then obviously you're not going to get that deduction. So our job is to make you aware of what's new.
Okay.
So if there's a new provision, for example, we've had some people say, well, I don't itemize my charitable contribution. I don't itemize. I take the standard deduction.
Yeah.
Now, a few years back, if you didn't itemize, you weren't deducting charitable contributions. Those are only deductible if you itemize deductions. Well, that changed. Now, if you don't itemize, you can still put either $300 or $600 on the front of the return, depending on whether you're single or married. Your filing status.
I'm looking at that right
and you get
here.
that little bit of extra deduction. Well, we've had a lot of clients who they got in the habit over the years because they've never itemized. Maybe they don't have a mortgage anymore, and so they're not even close to itemizing. So they stopped giving us their charitable contributions. Well, we call. That's a great thing about a small community. And knowing your clients is you call them and say, well, JD, I know you're a generous guy, so you had to make charitable contributions. If you made at least $300 or $600 in your case, if you made at least $600 in charitable contributions, we can take what we call top line deduction. It's a deduction that is sort of above the line. So. That's another change that we've seen.
And if you don't itemize,
if you don't itemize, you're entitled to that $300 or $600 deduction.
Okay.
So you don't. So the big change is that if you didn't itemize previously, you got no deduction for charitable contributions.
Ooh.
But now, if you don't itemize, you can still get up to a $300 or $600 deduction.
All right.
That's the big change.
All right.
Again,
for 2022.
Not a big dollar item, but $600 deduction. Say federal taxes of 25%, state taxes of 5%. That's worth $600 times 30%. It's worth $180 in your pocket. So,
yeah. The standard deduction, which reduces your taxable income and it lowers your tax bill. That gets better and better with age now. So
it gets indexed.
When you're 65.
There's a ton of provisions in the tax law that are indexed for inflation. So, where you might have an income cap on it, on a lot of things, they say, well, like we were just looking at, the Vermont exemption for Social Security. We were just looking at this, and I was pointing out that, okay, single, under 45,000, 100%. Well, that will likely, index for inflation.
Okay.
So that, because obviously, especially nowadays, 47, it's going to take 50 grand to buy what 45 grand bought last year.
What do we? I think I saw yesterday 7.3% inflation.
It's out of control. Pretty predictable, really.
Yeah,
I mean,
40
anyone
plus,
who
40 plus years though, Tom.
I love economics. I just like numbers, and it didn't take a rocket scientist to figure out what was going to happen. It was a double-edged sword when during the pandemic the United States government dumped trillions of dollars into the economy, and it's all about money supply.
Sure.
So, it's really simple economics. So it didn't take a rocket scientist to see.
I wonder what Ron Reagan would say about all this right now.
I don't know. Well, I don't know. I hope he'd be proud of the way our governments responded and took care of people.
Yeah.
These were decisions that I don't want to get all political. This isn't a political
of course.
deal.
Yeah.
But, there were a lot of decisions both at the state and federal level that had to be made quickly. JD, we shut down our economy. We've never done that in the history of our country. And so is history going to show that every decision was perfect? No, not even close. But to those in a position of leadership at the state level and federal level, I think they did a pretty good job. And those PPP programs were, except for, wow, that was a real complexity in 20 and 21 is. Again, the pandemic kind of blew up in March of 20, sort of right in the middle of tax season, and that was a real challenging times. But I'm really proud of how our business community responded. They figured it out and went forward.
What do we say? What would you say to someone watching, listening right now, who has, I'm wording this carefully, has this feeling deep in their gut that no one knows about, where they're kind of just secretly kind of hoping that they don't get audited? The odds are pretty low that you're going to get audited. They're very low, but don't take the chance, man.
Look, first of all, I've actually had people call my office and say, can I come in and speak with you? I'm potentially a new client. And they come in and they're almost in tears and they're like, I haven't filed my tax returns in 10 years.
Are you kidding me?
No, not at all. And so the first thing you do is you get to know them and you say, well, what happened? Well, 10 years ago I went through, I'm self-employed. 10 years ago I went through a really messy divorce. It was awful. Child custody battle. We're over it now. My ex-wife and I are friendly, and it's all worked out. But I was just in such a turmoil. Or my wife died, or my dad died, or whatever the reason is, and I was in there's usually a reason. I was, I got sick. I was, so I didn't file my tax return, and I was late. And then the next year, I really didn't know what to do because I hadn't filed my tax return from the year before.
Right.
And so I didn't file that return. And, here I am, I'm an honest guy. I go to church. I coach Little League, but I haven't filed my taxes in 10 years. What do? We file them. We file them. And we tell them, look, first of all, again, I mentioned earlier about practicing in Vermont. It's really great because I know the revenue agents and officers up in Burlington, and we've worked together on cases, and I think they know me as a stand-up guy and someone who takes his profession and honoring his profession pretty seriously.
Yeah.
So we put the tax returns together. And we do 10
hide
years worth of tax returns, and I say, okay, here's what we're going to do. We're going to tell your story.
You didn't hide
what
hide
do you
under
think?
your
You're
desk?
the first guy in the history of the United States who hasn't filed his tax returns in 10 years? It happens. But here you are, and you want to file it now. So, every once in a while, the state tax department or the Treasury will have what's called an amnesty program to basically tell people. So, look, it's not that bad. It's not the end of the world. No one's going to jail.
Yeah.
You didn't file your tax returns. That's not fraud. Fraud is when you file your tax returns, you're not being honest.
Yeah.
And, it's funny when people talk to me sometimes about that and say, well, you must be able to show people how to not pay taxes. No. No. I'm governed by a code of ethics.
Yeah.
I am licensed by the state of Vermont. And I am required, if there's any information I know about you or about your finances, I am required to reflect it on a tax return.
Yeah.
And there have been very infrequent over the, everything happens, I guess, over 30, 35 years. There's been a few occasions over the last 35 years where I've had to look at people and say, I can't help you. I can't work with you because I know this and you're not, and I know you're not reflecting it on, in your income. So therefore, I can't prepare or sign this return.
In the year 2018, the IRS audited 680,000 returns. That was a couple of years ago. I wonder how many they're doing now. I'm curious. I mean, of course we don't know, but
I doubt they're doing as many. But what they are doing, actually, so we have two types of audits. You have field audits, where the Internal Revenue Service will actually, they don't come to your home, by the way,
and they don't
unless
call
you happen to have a home office, and your office, like if you have a business and you run it out of your home, and it's a separate office, then they may, for the most part, if you're a business, if you're an entity, like if they audited my firm, they would come to the firm. But most of the time, the IRS just gives you a list of information that they need, and they're usually
by mail.
They
don't call you. They don't. They don't call.
Oh my God, no.
First
of all,
we have to say that because that's probably a scam.
Will they call you? Yes. They will never call you first. That's important. So, for example,
it's a scam if they do.
If Salvador and Babic got an audit notice, and I ignored it, they send it certified. I accept it, but I ignore it, and then they send another one, and then they send another one. Eventually, they're going to call, but I'm always going to have that mail first. So, those scam stuff. I mean, if anybody calls you and says they're from the Department of the Treasury, they're not. It's some naked guy overseas.
He might be wearing underwear, but here's the thing: if anyone calls you out of the blue from the IRS,
they don't.
Just hang up.
They don't. You will always receive notice by mail.
Yeah,
always.
Yeah,
without question.
Raylene got one of those phone calls one day on her cell phone. I don't know where the guy was, India or something, and she had so much fun at this poor man's expense, and it went on for 15, 20 minutes. She was just...
Did she end up switching to Geico?
It was like a fish on the end of the line. She'd reel it in real tight and then let it run around the lake for a little while. It was unbelievable.
Okay, so hey, I had some notes here, so I'm just going to run through a few things kind of quickly. We talked a little bit, file early, accurately. That's so important.
Yeah.
We talked about, the child tax credit. If you received an advanced child tax credit, please make sure you reflect that on your return accurately. Same with that third stimulus payment of $1,400. Those really are the things.
Big.
Even as a practitioner, I've had a lot of clients who said, I don't remember. I don't know if I got it, Tom.
Right.
And I'm torturing them because I'm like, dude, or dudette. We have to know. What I don't want to do is I don't want to file a return that isn't accurate because it's going to slow your refund down.
Right.
No one's going to call you. No one's going to audit you because of it.
Right.
But 6 months from now, you're going to be calling me saying, Tom,
where's my return?
Yeah. How come I haven't got my refund?
So go into your bank and do a search for $1,400.
Yeah. I mean, and look for that letter. Look for that letter. The IRS is supposed to be sending you there's two letters. One's a 6475. 6475 is for the $1,400 stimulus, and one is a 6419 letter, and that is for the advanced child tax credit. So again, talking about changes.
What was the other one? 65?
6475.
6475
and 6419, yeah.
And the 6475 letter is for the $1,400.
That's the $1,400.
Got it.
And and I gotta say, and of course the challenging thing is, and I hate to even bring them into it because I'll tell you what, Karen and I have our postal guy our delivery guy is awesome. And they are all working so hard, but they're challenged too.
Sure they are.
So I tell people, you are supposed to get, if you did receive the advanced child tax credit and the $1,400, you're supposed to get these letters. Doesn't necessarily mean you will.
Yeah.
So if you think you got the $1,400, but you don't get a letter, don't say, well, then I'm putting in for the $1,400 again. It's only going to slow your refund down.
Important.
So the child tax credit, we talked a little bit about that. That's, the advanced child tax credit. But if you didn't take the advanced child tax credit, that'll be it'll be $3,000 for most children, $3,600 for children under 5. And then that's going back to $2,000 in 22 it has first of the year. Big change is that credit is fully refundable. Okay. It used to be it only reduced your income tax down to 0. Now it's refundable, so that's important.
The child tax credit?
Yeah, it's a refundable credit now.
Wow.
So forgiveness of student loans, if you had, starting in 21, the rule is suspended in 20. So starting in 21, the rule is suspended for most canceled student loan debt that was incurred for a post-secondary education. So that's sort of important. Okay. You don't include that in income for 21. So if you did happen to have some student loan debt forgiven, you may still get a notice, a 1099-C cancellation of debt. Don't necessarily have to include it in income. And the same for if your employer paid your student loan for you, $5,250 can be excluded.
Okay.
So we talked a little bit. Earned income credit, we talked really briefly.
Yep.
It's a little more generous. Most of the changes are just changes to programs that we're already used to.
Right.
So the earned income credit is a little more generous. As I mentioned earlier, a lot of folks depend on that.
File it out.
Dependent care credit. So if you have child care, it's fully refundable. Didn't used to be. And then the maximum credit percentage jumps from 35% to 50%. So again, it's a program that if you have children who have who have been at daycare, you're used to the program. It's just gotten a little bit more generous for you. So in some other changes, advanced child credit was by far the biggest change, no doubt about it. There were some provisions in 20, I mentioned this earlier, that expired, child tax credit being one of them. Eligible tax, this is kind of an important one for some seniors. There are things called minimum distributions. When you hit 70 and a half, you got to take money out of your IRA.
I thought it was 72.
What's that?
I thought it was age 72.
The year in which you hit 70 and a half.
And a half, okay.
You got to take money. You got to take minimum distributions from your IRA. It's just a formula that they do, and the brokerage houses or the banks, wherever you happen to have your retirement funds, they figure it out for you based on your age.
RMDs, yeah.
So in 20, you didn't have to do that. So
Right.
if you were fortunate enough to have enough income and you said, well, I want to let it ride. The market's doing pretty good and I don't necessarily need the income. You could do that. Well, you couldn't do that in 21. So hopefully you took your minimum distribution because you're going to get penalized if you didn't. And then lastly, like I said, the biggie is the one that worries me also for people who self-prepare is that UCE, unemployment compensation exemption that existed in 20 that does not exist in 21. In 21, if you received unemployment compensation, it is 100% taxable. There is no exemption anymore. And like I said, that one kind of worries me just because of the mechanism. Treasury did a great job of figuring it out, but it was such a simple mechanism. I'm afraid that someone's going to look at their previous year's return, because let's say the return didn't change too much.
Yeah.
What most folks do is they'll look at the previous year return and say, well, I'm just going to, compare the two.
Yeah.
And kind of do it the same way. Well, if you took an unemployment compensation exemption in 20, don't take it in 21. It's gonna mess up your return, and then you go to the back of the line.
Wow.
So
that's
about it.
This is really, really great stuff here.
Well,
man.
thank you. And like I said, it's there's a lot of great organizations too. If you're overwhelmed, I know Capstone has a great program. They will help you prepare your income tax
Yes,
returns.
they do.
So if you can't, and I tell everyone. Obviously we enjoy our clients. I love my clients. That's really the greatest thing. The greatest thing about doing the tax returns that I do is I really enjoy the clients. Mm-hmm. And so every year, it's kind of like having a friend you get to catch up with every year.
Yeah.
So every year they come in and they bring their stuff, and then it's like, you see a new exemption. And you call them up and you're like, oh,
Interesting.
congratulations. I didn't know you had a baby this year. That's awesome.
Wow.
And so it's really a lot of fun. But not everyone can, can afford to prepare. And so if you can't, there's some great organizations like Capstone who are there to work with you and help you out.
What's it cost to
Boy, that's
I know it depends.
That's
on
like
how
saying, "Hey, I wrecked my car. How much does it cost?"
Simple,
really,
simple returns, real simple. I mean,
a simple return. We're hard pressed because we have this process. Yeah. It's really important, obviously, to us that we get it right.
Yeah.
And so we have a process where every return that is prepared goes through sort of a 3-level, I guess, call it quality control.
Wow.
It originates with the preparer. And then it goes on to processing where things are checked again.
Jeez.
And then before anything leaves the office, we look at it again. We look at it a third time, and we have someone who just flips through the return, compares the prior year, and obviously makes sure that it looks accurate. And so that quality control process adds a little bit of complexity to it, but it's definitely worth it.
Yeah. And peace of mind. Just peace
Well,
of mind.
like I said earlier, we may prepare hundreds of tax returns a year.
Right.
The client only prepares one.
Sure.
They only do one return. So it's
I've
important
come
that
to
we
you-
get it right. So, the cost, we're hard pressed, even a simple return.
Yeah.
We're hard pressed to do it for, much less than $300.
Okay.
And I realize that's, for a lot of people. And I always tell people, I don't have an issue with anyone doing their own tax return.
Sure.
My kids hate me because
Sure.
now I just do their tax returns for them. But I think everyone should understand their tax return.
Mm-hmm.
So take a stab at it. And if
Yeah.
you have, maybe a W-2, a 1099, unemployment compensation, you should be able to, prepare your own tax return. It may take you a little while.
Right.
But it's an important thing, and
It might
and
cost
you should,
a few times.
Yeah. So I have people call me all the time, friends who call me and say, well, I do my own, like it's some sin. I do my own tax
Yes,
return.
right.
It's like, well, that's okay. So do I.
Yeah.
And they'll have a question, and they'll say, well, Tom, can I bother you, with a question? Well, first of all, you're a friend. It's not a bother, and good for you. You're smart enough to do your own tax return, and you have the time.
Sure.
Not everyone cares to. So.
Right. I remember coming to you with envelopes that I hadn't even opened, and it's just like, Tom, I get these.
It's like, what do you want to be surprised? Or
I don't
something?
even.
You couldn't. Oh, you were always a riot because you were.
I don't
You
wanna
never
open 'em.
opened your envelopes. I always thought that was fear of commitment. Somehow, if you opened the envelope, you had to do your tax return.
Fear of confusion, my friend, and that's why I've given.
But
you...
even with that, again, we always compare.
Yeah.
So we're always looking for some sort of like a regularity to make sure that we get it right.
Sure.
But yeah, a lot of people don't. I always tell them, well, open. What if you give me a 1099 that's inaccurate?
Right.
Now, you may know that right away. I may not.
Mm-hmm.
So, there are obvious things, Social Security numbers, names, obviously there are some things that will stick out like a sore thumb. But even when they review their tax information, and they give it to me, we're always so careful to make sure that it's accurate and complete.
Mm-hmm.
Because like I said, the same reason we send the checklist. If you don't tell me about something,
it could bite you in the ass.
Case in point, we talked about kids, people coming in and visiting with them. Well, new dependent on a tax return, and I looked at the date of birth and called the client back, and I said, you adopted a child this year.
Mm-hmm.
And they're like, yeah, and they were telling me all about it. I'm like, that is awesome. Do you know that you can get a $14,000 credit for that? Well, they hadn't given me that information, so obviously they did. And got a $14,000 and change adoption credit.
Should your child file taxes in the state they went to school if they worked in that state? That's a question that just came
Oh,
out.
sure. So if we get this a lot. So if you're, for example, let's say your child goes to school in Massachusetts and gets a little part-time job, and they get a W-2 from a Massachusetts company. Yes, they have to file, depending on the income level and whether or not, a lot of times students will be exempt. And so there'll be no tax withheld and they're under the threshold. They don't have to file. But assuming your child has to file, yes, you file a non-resident return in Massachusetts. It doesn't change their state of residency.
Okay.
They're still a Vermont resident,
Okay.
but they will file a non-resident return in Massachusetts. Otherwise, they're not, if they're due a refund, if they've had taxes withheld, they won't get them back if they don't file. So, yes, they have to file. All of us does. Doesn't matter whether you're a child or not. If you took a gig, if you went and worked in Massachusetts and you took a part-time job running a studio down there for a couple of months, they would give you a Massachusetts W-2, and you would file a federal return, a Vermont resident return, and a Massachusetts non-resident return.
Okay, interesting. We love having you as I love.
I
having
like
you.
seeing you.
We love having you as a presenting
Well,
sponsor.
what's interesting is people, I guess they don't often get to see. This is what I love, JD. I love working with businesses. It's such a great career, and I just love working with our clients and working with the businesses. It's great, and people don't often get to see this side of me. I have another more colorful side.
Oh, sure.
So thanks for having me on. Thanks for the opportunity, and like I said, file early, file electronically, file accurately, please.
Thanks, Tom.
Thank you.
I appreciate you coming in. One of our presenting sponsors, Salvador and Babic. Thom Lauzon, our guest, along with Fecto Homes, Green Mountain Mulch, Fontaine Forestry, and Millworks, Giroux General Transport, Emsley's Florists and Gifts, The Cornerstone Restaurant, Central Vermont Chamber of Commerce, Barry Area Development, FGB Theaters, Gustos, CW Creative, Vermont Custom Woodworking, ASB Financial, Barry Montpelier Times Argus, Donnybrook Fight Promotion, Wood Doodles, Wright Electric, Gauthier's Quality Grounds and Maintenance, Preston's Kia, Granite City MMA, and Barslow Construction. Thanks, everybody, for watching the show, following the page, clicking a like, maybe dropping a comment. Make sure to tell your friends and share away if you like the podcast. Appreciate your eyes and ears. We'll catch you again next time here on Air It Out.